What's up, you guys? Alan Ryan here. Today we're going to talk about an important topic, compounding interest. It's not sexy, but it's very important. And Albert Einstein once said, compounding interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. That's why we're going to get into compounding interest today in today's video. Let's get right into it. So getting into the topic of compounding interest, it's important to consider, well, how much money would I make by just keeping my money in a bank account? So let's look at the national average for bank accounts, and that number is your savings account will yield a 0.07% per year, which is next to nothing. So if we look at the annual inflation rate of money, it's actually somewhere around 2 to 2.5%. Let's call it 2.25%. So by keeping your money in a traditional savings account in your bank, you're actually losing around 2% per year just by inflation. So if you want to lose your money, that's a great way to lose your money. Just leave it in a traditional savings account. But I know you are all smarter than that. So let's look next at a scenario. So let's consider how much money people have made through stimulus checks. So if we were to consider if an individual just saved the amount of money that they got in their stimulus checks and put this money in their traditional banking account at 0.07% per year, we see here that $3,200 is how much they would receive from their stimulus checks. And if they would have added a monthly contribution of about $100 per month and left it in there for a length of time of 30 years at a bank savings rate of 0.07%, you'd see that at the end, they would have around $39,635. And here's the graph that shows their future valuation versus their total contributions. And you see here they made about $435 from interest, which is basically nothing. They lost money from inflation. But now if we look at VTSAX, which is the Vanguard Total Stock Market Index, which covers around over 3,000 different companies within the stock market index. And instead of putting that money in your savings account, you put that money in the Vanguard VTSAX. You'll see here that the year-to-date average return is around 9.55%. So let's use that number instead for this case. So if we were to look, $3,200 is what we started with our stimulus checks. And then we added a $100 monthly contribution for a total length of 30 years. And we have a 9.55% per year interest rate by investing in VTSAX on average. Note that this number may fluctuate, but on average it's 9.55%. And you'll see that the total here is $230,698. So the difference between having that money in just a traditional savings account and having that money grow in an index fund like VTSAX is on the order of $200,000 or so of earnings, which is massive. So now let's run another scenario of someone who has a job, who's been working for a few years, and they've saved $30,000. So this is a perfect example of a coworker of mine who's saved a lump sum of money, but she is confused about where to invest that money. So instead, she just parks it in her bank account. So she actually has a pretty aggressive savings per month of $1,000 a month. She starts off with $30,000. The length of time is 30 years. This is going to be throughout her entire career. And 0.07% is the average that she's going to get in her savings account. And if we calculate this, she will have $394,000.314 by the end of her 30 years by saving with this amount of principal and this amount per month. Now let's compare that to if she were to instead invest that money in an index fund like VTSAX. So instead, if she were to put that money, $30,000 principal, $1,000 monthly contribution, length of time is 30 years, and now she has a annual rate of return of, on average, 9.55% from VTSAX. This amount is actually almost $3 million, $2.3 million. And you'll notice this is a massive difference. So this is the power of compounding interest. And take a look at this curve here. You'll see that it's nearly exponential. And all of this work she did up front actually steepens this acceleration. And by the end of her career, she has a massive lump sum in there, which she'll easily be able to retire on. So now let's go for a more aggressive scenario. I know none of us want to work for 30 years. We'd actually like to work for maybe around 20 years, and this is a pretty realistic goal. So instead, she has $30,000. She starts with the same amount of principal that she's earned after a few years of work. She uses a monthly contribution of $1,500 per month, so this is a little bit more aggressive. And the length of time is 20 years, so she cuts off 10 years of service. She uses the same 9.55% average annual rate of return from VTSAX, and this amount is about $1.2 million. And that's actually a great amount of money. So if you wanted to retire off of $1.2 million from your savings account from your VTSAX, this is totally doable. And I'll show you that in a moment. And this is not even considering any allocations that she might have in her 401k plan, any pension, or any other potential retirement means. So looking on forward from a retirement withdrawal perspective, how much money can she take out per month? So here's the amount of money that she's made, which is about $1.165 million. And let's assume the withdrawal rate is about $5,000 per month, and that would be somewhere around $60,000 per year that she can spend. You know, think of all of your expenses plus entertainment and everything. And we hope that she can spend this amount of money and live off of this lump sum of money for the rest of her life. So assuming a 7% annual rate from the money that she currently has, and if you see here, the US large company stock index makes around 10.2% per year. And if she puts some of that money into bonds to even it out, let's call it a 7% annual rate of return off of the lump sum of around $1.2 billion. The federal tax bracket assumed is 22% because at retirement, we're assuming that she has no other income. And you'll see here that if she's single or if she's married, filing jointly, her and her spouse can have a similar income and be in that 22% tax bracket. So let's go ahead and calculate it. So if we calculate it and look at the results, you'll see that this money, the $1.14 million that she started off with in retirement, keeps accumulating. So she can continue to spend $5,000 per month and still that money is still compounding and growing. So by the time she passes away, she's still giving off more money than she had at retirement to her children or to whichever heir that she's going to give that money to. So this is a powerful example to show you that if you continue to put money in consistently with a high average rate of return, you'll end up with a large lump sum at the end that you can live off the passive earnings on that money. You don't actually have to touch any of the principal of that money. You just are working off of the interest off of that money. Now, another important point to mention is that it's very important that she never sells any shares when the stock market dips. So each year, the market, you'll note, let's go back to our VTSAX. You'll see that some of the worst years in VTSAX was down 36%. Now, if she would have sold shares when it goes down because she panics, then she's going to lose a lot of the potential earnings that she makes. Also, it's very important when the stock price goes down like that, you're actually buying those shares at a major discount. So it's very good if the stock market dips at the beginning of her career, she can buy those shares at a discount. And then later on, you'll note that on average, we're around 9.55% per year. So I hope that clears things up for compounding interest for you. I know it's not sexy, but it's so important. If you can do anything right now, it's to invest automatically into an index fund and then keep saving that money year on and year out. That will snowball into a large sum by the time you retire. I hope you found this video interesting. Please like and subscribe and comment below if you have anything to add to the video. Thank you so much. Have a great day.